In this video, I'm going to talk about what I learned from trading stocks in the past 4 to 6 weeks. And please subscribe to the channel and hit that bell icon so you get a notification every time there's a new video. Okay, so what have I learned from trading stocks for 4 weeks, or you can actually call it 6 weeks now. So my name is Imi. If you're new to the channel, my name's Imi and I trade stocks and Forex. Well, I day trade, I normally day trade the DAX 30 and Forex for a living. But this year, I started trading stocks using the strategy I call the Setup 1. Now, I received some money at the start of the year from a family member, well, my brother, and I decided to trade the US stocks. Now, luckily for me, in the UK, we have a trading vehicle called spread betting. And there's a broker called IG. They provide all sorts of markets. So the main advantage of spread betting is that not only that they provide all the markets, it's tax free and they give you a lot of leverage as well. Now, it used to be quite a lot of leverage in the past, but after the European Union intervention and the rule changing, it kind of dropped, but it's still quite a lot. And my broker, IG, provides all the world's stocks to trade. I mean, literally everything. So you can find all commodities, all stocks, even Australian stocks and, you know, American stocks, all the energies and everything is there. But all I want is the US stocks because that's what it moves. And the vehicle and the way to find trades is using TradingView scanners and stuff. Now, because I've never traded stocks before, I consider this as a new challenge. So this is how I started the start of the year, with a new challenge. And to make it more fun and exciting activity for me and everyone else interested to learn trading and, you know, to see how it goes, I decided to keep everything public. I share everything with you, and this is one of those videos, how I find good stocks, good quality stocks to trade and invest, including my technical analysis, the indicators and templates I use, and recap and reviews. This is one of those. So here I am, 6 weeks, I think it's 6 weeks later. This is the review of 6 weeks, and there will be a grand review. In a way, I mean, in one sentence or in one phrase, what's the, you know, to put it mildly, how do I feel? Now, I created this presentation about last week, but I was too emotional about it. And it's this: I am disappointed. And that's the main thing. Like, it makes me unhappy because I made some mistakes. Now, if the strategy was to blame, probably I wouldn't be feeling this way. But maybe I had a bit of bad luck, right? If you like. I got out quickly. I may have taken some wrong decisions. Yeah, that's true. And therefore, the result is that I'm down 1%, probably slightly more than 1% now. Just, let's call it 1.25%. And that hurts. It really hurts. And now some of you might be thinking, you know, 1%, not a big deal. It's only 1%. But I want to explore, why am I still upset? I mean, I'm not that upset now, but a week ago when I started this presentation, I was really upset. And I'm upset because of things like these. See, this is one of the examples, CBRE. So I got in here, very normal. Now, at the time of the entry, the box was big, but I used this box to have a smaller stop loss. So I put my stop loss here instead of here, right? So if you know me and if you've seen other videos and if you know what Setup 1 is, when you take an entry here, you have to have your stop loss here and target point up there. It went up, it was supposed to come here, and then I was going to move my stop loss to break even. I didn't get that chance. Price comes down, I get out quickly, fine. But the idea is that if you get out quickly, you have to get back in. I did not. Now, CBRE is an example of a stock that I entered and I got kicked out before hitting my target. And that's not just one stock. Look at this one, mRNA. Now, this is Moderna. Now, this is where the vaccine news came around back in November. It went up, came down. We took a trade here, but it wasn't on this account. It was all different thing. We benefited from that. But for this account, when I was taking the trade, I think we started on the 19th of January. It was a bank holiday in US. And the next day, I saw this. Pullback is too much. Plus Moderna, this was really highly volatile. So I didn't want to take risk. I wanted to start with stocks that are slow. I did not take it. And now look at it. Now, mRNA is an example of a stock that I filtered, but it went up and hit my target. Here's another one. Now, this is the one where you have the weekly chart going down. This is what I call the Scooby pattern. It's pretty good. It was in consolidation, right? It breaks out, pulls back, creates the Scooby pattern, or the setup one on the daily chart. Beautiful setup. And I didn't take it. Why? Because I was thinking, you see, what I did was I did fundamental analysis on this. I let my opinion stop me. I thought, hold on, this is not the time for airline-based companies to go up. That's a very stupid thinking. The setup is there, take it, look at it, and it's still going. Now, I need to fix my brain. Trading is a really, actually it's a mental game. And 80% of trading success depends on the mind. And you have to detach the two things. Okay, what is your strategy? Are you a technical trader? You have to look at your setups and you see the setups, you check the rules, you take the trade. Simple as that. What's the other 20%? When I was making this, my son was here and he said, what's the other 20%, Daddy? Well, the other 20% is all the technical analysis and all of the strategy, the chart analysis, entry, exit, risk management. That's all 20%. I know most of your time will be spent on that. But just factor-wise, you have to do all the technical analysis and risk management and all of that. And you will spend quite a lot of time in that. But the importance-wise, 80% is in your mind, because if you can't hold on to your strategy, if you can't follow your rules, no matter how much time you spend on your technical analysis and your entry and exit and risk management and all of that, it's going to go to waste. So you have to use your emotional intelligence. What is emotional intelligence? It is the ability to understand, use and manage your own emotions in positive ways. So I want to use that. So I must listen to my emotions. And so I wanted to explore, why was I disappointed? Why was I upset? Was it because I lost money? Well, I didn't really lose money. So what was I upset about? And then I started going in. So I've learned that I must not ignore these feelings. These feelings are important. They're telling me something. Whatever is going on in my brain and the thought process that's going on, that is creating these feelings. So then I saw the answer was, okay, I want to ask myself, how do I feel? I feel like I have to learn the basics again. You see, I've been day trading DAX and all of that, and that's where I make my living from, Forex and all. But when I started trading somebody else's money, it appears that all those basic problems that I used to have, or a beginner trader will have, they have hit me again. It's not a doom and gloom story, but I feel like I have to learn the basics again. I'm going all the way back to the start, and perhaps that is what is upsetting me. I don't want to be, put in that place where I think that I am, a beginner. But then again, I am a beginner in stocks, right? Probably there's an ego inside me. I expect more from myself. I perceive myself as a good trader. I do. I feel that I'm better than this. That I can do better. I can avoid mistakes. I wasn't expecting making mistakes like getting out early or moving stop loss too early or stuff like that, or missing trades. And that's one of the biggest one that we will cover as well. I do expect that I should have done better, but seeing my mistakes, I look like I'm a total noob who started a month ago, and that's kind of depressing, but interesting as well. You know, things can change, and perhaps that's what's frustrating me. That's what it is. So what have I learned in the past 6 weeks? I'm going to go through this. I did a thorough analysis, and I thought I will share with you my journey. This is one of those things. So I did a thorough analysis and a detailed review of my trades. It's not that many. It's about 13, 14 trades. And I have found 4 problems that I must solve. Number 1, exiting too early. So without going into too much detail, I'm just going straight away into what I found. Exiting too early. That's one of the problems that has been there, like either exiting too early with a profit or exiting too early by moving stop loss too early. Both is a problem. So I have to consider myself, taking me back to stage 1. Today I made a video on that as well, of stage 1, where you set your target point at 2 hour, stop loss at 1 hour, and don't do anything in between, apart from moving stop loss to break even when 1 hour profit is made. I need to take wider stop losses, right? I need to have a stop loss based on entry point and the box low, where I think is the bottom of wave 4. Do not exit until what I think is the bottom of wave 4. You know, that is hit. So what does that mean? All right, let's explain that. So we'll use the example of mRNA, a CBRE, that earlier. Now, if this is my entry here, so you see, this is where I would be triggered, right? And at that time, if this box existed or this box existed, the question is this the bottom of wave 4? It can't be, because there's a low here. And if this is the bottom of wave 4, then I will be proven wrong only if price goes below this. So then if I use the option of entering here and then moving my stop loss below the box, that means that there's a possibility that I can get out, minimizing my risk, but I should then get back in. So that's another thing. So what I should do is to have my stop loss, my entry point here, and my stop loss here, and then don't touch it until it hits target zone 1. That's as simple as it is. So that's the action that I must take. I must keep my stop loss orders below the low of wave 4 and hold on. So that's what I'm going to do. The effect this would allow me is that I'll be able to hold the stock longer without getting stopped out prematurely. And if I had done that, we'd be sitting at profit. So number 2, don't trade big boxes. You see, earlier today, I had a mentoring session with Frank, and I was talking about the importance of big boxes. So the distance between a box, if it's 10 points, and then the distance between my target point, this should be double of this. So if I take a 10-point stop loss, my target point should be 20. But we can't just choose our points. We can't just say, oh, I want to take 20 points. No, we have to look at where is target zone 1. Now, if you don't know the target zone 1 concept, you can search my videos, you will find it. It's a fib expansion 62. So when I take my entry, wherever my entry is, if my stop loss is 10 points, I want at least 20 points between my entry and the target zone 1, which is fib expansion 62%. So this is the second thing that I've learned, is that I must avoid setups with big boxes, because then those trades are not feasible. Like I said, it's back to basics. I mean, I was teaching somebody today, even before this video, and you'll have that video on the channel. It's already uploaded. I was teaching this person the bare basics of this strategy. And this is the basic rule of the strategy, not to trade big boxes. But I have traded big boxes, as you can see on CBRE as well. So again, CBRE example, if you look at it, the box is not too big, but it is big. If you look at it, it's as big as this one, right? We want box of this type going sideways. Ideally, I should have taken a trade if this had not broken below this, a tight box. So if I draw a box here, see, like so. Now, this is how much it would have moved. If it had moved this much, I would have turned into break even, or I would still have kept stop loss there. And then there's another box and another box. So if my stop loss was based on this much here, then I had 3 R's in this trade. But if my stop loss was this big, let me just delete those. So if my stop loss was this big, entry here, stop loss here, then visually around this much would be my 1 R, and that's my 2 R. So I have to have my stop loss target point there. So I cannot have my stop loss here. Stop loss will have to be here. You have to allow the trade to grow. And now if you look at the 5 times higher time frame, which is the weekly chart, we can see a stock, 1, 2, 3, 4 candle pullback down. We have a nice strong pin bar candle here. And if I took my trade here on the setup 1, I have to keep my stop loss below this. I should not allow this to shake me out. And if it does shake me out, I have the option to get back in and take some profit back, so it will cover the loss at least. And these are the things that I need to look at and make better decisions. There's another one here. This one is ESI, and I think I don't know if I'm still in it, but there's a big box here. Again, bare basics. The box is too big, right? So my 1 R is going to be over there, and I don't have space here, and then they'll be going all the way up. So if the box is this much, that means price has visited that level before, and it might come there again. So there were 2 mistakes on this one. We have a very strong move up, and pullback is not enough. Same here, very strong 3, and more chances of A down, B up, that's the B trap, and a C down. So I ignore that fact. That's another mistake, and I shouldn't be making these mistakes. I don't do these mistakes on the M1 chart, and I'm doing it on a daily chart. That's weird. Number 3 is too many stocks. Now, because I run a scanner, and if you don't know what that is, you can watch my earlier videos of how to find stocks. I have a scanner setting going on with TradingView. I find my stocks, which allows me to find setup ones, the one with wave 3 and 4, and that going on. If my parameters are too loose, I'm gonna too wide, there will be too many signals. And what happens is that if there are too many signals, then you'd have to pick and choose. And if you pick and choose, then it's going to be pure luck. The ones that you choose, if they moved up, you will feel like a genius. If not, then you'll feel like me. So that's probably what's happened to me. And this is the 3rd learning point. I have to narrow down the search. So I have to find ways to focus on a select number of stocks and pursue them properly. Once they start moving and they're in a trend, they can dip back up and down again, so I can take 2 or 3 setups in that. Don't take them out of my watch list. They can just be there. I wasn't sure exactly how to achieve that, but last week I have achieved this. It's just I have to. I don't want stocks that go up and down like this. It's a swing trading strategy, and so basically we'll have to look for stocks the opposite of day traders. So day traders would like to have stocks that have limited supply and more demand, so the price goes up too far within a day or two. We want to go the opposite of that. So the stocks that have float less than 50 million will be highly volatile. So that means the stock above 50 would be less volatile. So that's one of the change that I'm bringing. So I'm going to trade stocks between 5 and 30. Initially look for them. I will look for other ones as well, but this will be the main focus. And one of the idea was to only scan S&P 500 companies. That's a very good strategy. So those are reputable, very good companies, and one or two of them will set up every week. I can eliminate some of the sectors, the one that move really slow. So I can eliminate utilities and finance. They can go away. And now, the fourth point, things I don't understand yet. So these are some of the things that I don't understand. So we need to fix that. And the things that I don't understand are a lot of stocks I did not take, but they were good ones. I don't understand why I didn't take them. Some of them I took, and they did not do well. I don't know how I missed the good ones. And so how I missed the good ones, and I some reason. So I don't know why the ones I have taken are the laggers, not the movers, or they have turned around. Or is it the feeling, because I was expecting, because almost every stock that I've taken, and this is the important point, almost every stock, I think apart from one or two, they have not hit the bottom of wave 4. So that's definitely one of the reasons. Is it just plain random luck? Maybe, because the probability of wins and losses is randomly distributed. You could have a series of 6 losers or 6 or 7 winners. That can happen. But the idea is that, did you follow your rules properly? So assuming that if I follow 80% of my rules, I know that at the end of 100 trades, there's going to be profit, because the setup 1 obviously has more than 1.5 profit factor. In fact, one of the traders, a very good young lady in our trading room, she shared her end of 4th batch or something. She had a profit factor of 3, and she's only be trading once or twice a day on DAX using setup 1. So the most interesting thing, however, is that the ones that I have paid rent on, the losers ones, have actually not gone down. So something to do with the stop loss. It's just that I exited them. So obviously a problem with my stop loss, which I explained before. So I need to find the answer to that, and I think I know the answer. And to further highlight that, let's have a look at the purple list. So what is the purple list? Well, the purple list is basically all the stocks that actually I took. I found on the scanners, and for one reason or another, I did not take them. So on TradingView, you can do paper trading. So I thought, okay, I'll have the live account running on some stocks that I take, and on the paper trade, I will take every other stock that I think I should take without further analysis and see how I go. Which one will do better? So let's find out. So, and then what I've done is that there's a technique of labeling your trades. You can color them. So every trade that I have either missed or not taken, I have labeled it purple, and there are quite a lot of them. And let's have a look at it. Okay, so this is my purple list. And there are quite a lot of them. And let me show you my paper trading. So the real account started with 20K, and the paper trading started with 20K as well. The paper trading, some of them is like higher risk as well, and it allows you to take so many trades that obviously you don't have that much money to actually take those. So that's one of the factors. But it also includes stocks like these, NBR, right? This is the one that I haven't taken. For whatever reason, I haven't written it down, but some of them I have written. So APHA, this was a trade that I took on the hourly chart. So this is not included. This was a DS0. But anyway, I took it over here and I got out here. Again, if you look at it, this is the bottom of wave 4. So if I took a trade above this level or above that level, my stop loss should be here. But even if you take it there and get out here, the idea of getting out early is that you have to get back in. You have to be committed to that trade. If I took that trade, this was multiples and multiples that went up. So that, but well, let's not focus on this one. We need to focus on the daily and the weekly charts. Okay. There's another one here. not really excited about that. This is the MESA Air Group. So I use my clever brain to think, talk me out of this, thinking, okay, airlines are probably having bad time, blah, blah, blah. And turns out this is, every company is different. Just focus on the setup. Let the chaos deal with this. So if I took this trade over here and I messed up my stop loss, I would be out here. But look at this. If I took this trade and managed it correctly, entry here, stop loss here, guess where it is now? It's gone to 13. I think right now it's sitting at 1:5. And that's the kind of trades I wanted to catch. And I want to rectify this. So I could do that. Okay. Then we have problems. This is one of the issue that I want to. So I made a fundamental mistake. I started looking at levels to the left. Now for a setup 1, you don't look levels to the left. Your level to the left, wave 3 is obviously clear. You don't filter a trade based on that. You filter it if your entry and the peak of 3 are too close. That's a different thing. But if you can take a trade, enter here or here, that's all. So this one was filter. And the lesson is that to trade the setup 1, don't pay attention to what you think about the sector or this chart or that. Trade what you see. So if I took this trade over here, I'd probably be sitting at $1,000 profit on it. That's that's the purple list. Look at it again. I've marked it gray. This is RTX. I didn't take it here because I was worried about this level and this level. This is legit. I would say, because there were 2 levels here, I was worried about it. If I did not take this trade because of that, that's fine. But then there are others, like this one, right? And then there's more. Okay, this one. Filter based on levels to the left. This was a clearly moving, beautiful setup. But my mind played the tricks on me, right? I don't know what happened to me. And I did not take these trades. Look at this one. Beautiful trade, 77. Now it's at 86. Did not even look back. And all I had to do was bring stop loss to break even around here. And then I will be trailing it and my stop loss will be here at 83. So that's the purple list. Let's have a look at a few more. Lift. My thought process was, oh, Texas are not doing well. Let's not. No, that's not how it is. You see the weekly chart. It's gone up, pulling back. You have a peak of 3, wave 4. Let's just quickly mark this with my favorite tool. Somewhere over here is 1 and 2. This is your 3, that's your 4, and that's your 5. Stick to that. See, 3, 4, 5. Okay, that's another one that I missed. I had my pending order, and for some reason IG did not accept the order and got cancelled. I should have actually gone in and market ordered it, but I thought, okay, forget it. Let's not trade it. This was the same kind of thing with a bigger box, and it's going. A pen. Okay, this is one of those unfortunate ones. I set my pending order, and at that time, I think, I don't know, that GameStop thing was going on or something. It was glitchy, and it was early. I wanted to enter over here somewhere, but they were not allowing it because they were not coating this one. So that's fine. That's okay. Another setup. I thought the range was low, blah, blah, blah. CMRE. This is one of my favorite stocks. I traded it years ago when I used to spread bet back in 2009 and 10. Antofagasta. It's UK, London Stock Exchange listed company. Quite high in price, but we could get pretty good bet on this. Could have traded from here or here. That went up. So let's not, this is CBRE. Look at it where it is now. It's gone past target zone 1. Beautifully hit everything. I think I had the idea on this here on TradingView as well. Went up, kicked me out here, goes up. There we go. The other day I had the idea of TUI. This is another UK London Stock Exchange stock, airlines and consumer services, basically travel and all of that. And they had good news, but I didn't believe in it and I did not take the trade, and now look at it. UEC, they were not letting me take the trade, but I did share it in the chat room. Some of them thought box was big, but look at it, it's gone. mRNA, come back, and INFN, and I think the current ones are this is another one, the hotels and stuff. Again, my thinking was I don't want to invest in real estate, blah blah blah. In fact, the trade it's set up, take the trade. Some of them will work, some of them will not work, and that's the whole point. Okay, so finally, let's finish with some reminders. Remember, this is a review, and it is a mental analysis, mental check, and the problems and review of the trades that we have taken. Don't read the news. There's no need to read the news. It's not going to help me. It just gives me opinions and stuff that keeps me out. The price is there, the strategy is there. If the market is moving, if your weekly chart is moving and daily chart has a setup one, just take the trade. It's not going to move just like that. Don't go for the hype. I'm not going to go for GameStop and all of that kind of thing. We are swing traders, so we're going to go with that. We'll buy Tesla if it was a good setup. Like 444 around that area was a good setup, even though it was all the way up there at that time. And then it went up to 800. Now it's dropping down again on the list. Might set up again. Simplify, simplify, and simplify. Trade the setup. These are the bare basics that I'm going back to, reminding myself I want to trade the daily charts exactly the way I trade setup one on either currencies or anything else. Whether long or short, the only difference is that it's stock, it's daily chart, and we're only going for buying stocks because it's a predominant bull market. And yeah, the setup will take care of all the news and all the hype. The setup gives me the main edge in the market. That's my strategy. It gives me 66% win rate, and I have to stick to that. Actually, I can improve it even further if I just follow my rules correctly. Remember, trading is a game of probabilities. So I'm saying it to you as well, but actually I'm saying it to myself, reminding myself it's a game of probabilities. Don't get lost in the result. Focus on the process. Don't get bogged down by that. Don't allow your brain to get clogged with, blocked with all of those extra information. It's a game of probability. Take a trade. It might work, it might not work. Just go with it. A trading edge is nothing but a higher chance of one thing happening over the other. And that's all there is. Wins and losses are randomly distributed. You cannot predict the outcome of the next trade. You can predict the outcome of the next 20, 30, or 50 trades. You have a very high chance of a probable outcome with more confidence. But the probability of the next trade is completely like it's random. So it's completely random. Anything can happen. It can be either, by anything I mean, it can go up or down. So the thing is to understand probability is that the probability of the sum of the next 20 or 50 trades is known. It's well defined. If you follow the rules and you have the strategy, you know that it's going to be 66% win rate. Then the setup has 60% win rate. It tried and tested and confirmed more than a couple of decades. And in the next video, we will explore some more about the purple list. You will learn the true potential of this method, how I failed to profit from it, which we already saw a little bit as well, and how I plan to work around this problem and potential opportunity, which we've already discussed in this as well. So if you like the video, hit the like button and subscribe to the channel so that whenever there's a new video, you get a notification. Hit that bell icon, and I would really like to thank you for your love and support, and I will see you in the next video.